Michelle and Morkeith, welcome to the podcast. Excited to host another block on this episode, a part of season 7. How are we feeling? What's going on?
We're good. It's getting late here in Stockholm, so it's a perfect way to round off the day.
What time is it for you right now?
It's cold. It's getting into spring. It's 1920.
Wow. Okay. Well, I appreciate you guys being on super late. I know we've been trying to make this episode a reality for a minute, but never. I guess better late than never. That's what I wanted to say, right? 100%. I think a good place to start, guys, as to how I like starting all these episodes, and is understanding a little bit about who I'm speaking with. Okay, so I want to start with a couple intros from you, Morkeith, and then from you, Michelle. Who are you guys? Like, what does the world need to know about you? And more specifically, how did you get your start into Web3? We can start with Morkeith and then work our way to Michelle. Maybe even include like how you guys met each other in that.
Perfect.
Sounds good. I mean, you and I, Adam, we met over at Bogota when we started hacking together with your co-founder for Bello, Ellie, which gave us also a great shout out in your ETH Denver recap. That was cool. And, we were sitting there, we were talking about creator economy, and that's basically what we do. I run product here at Anotherblock and came across Michelle after I've been working in DAO tooling, a little bit in DeFi, and basically started to fall in love with this kind of like alternative asset and the creator economy. And basically working with something that sparks joy and passion for people. I mean, money is great as well when you talk about DeFi, but it hits different with like trying to change a whole generation's kind of behavior of trying to reshape ownership, and especially with music.
And for you, Michelle, where do you come into the picture?
So, I mean, long story short, so I'm the CEO and the founder, one of the founders. We're 3 founders. But yeah, my background also like grew up between Sweden and West Africa and Burkina Faso, moved back and forth between the two. And growing up, my dad set up like the first modern record label in Burkina. So I really like grew up seeing and understanding like the difficulties and the awesomeness of music, but also like definitely like how difficult it is to monetize and make a big thing out of it. And he really like started that industry from scratch over there. So given that experience and seeing that, like I never thought I would go into music. So my background has been a lot in fintech. My path into Web3 was actually quite slow. So one of my colleagues in 2015, he went on to start Dune Analytics. But he was the one who like sat down with me and bought the first coins, and like, he was doing this whole gospel thing, So I got introduced via him into the space, but then I would say I was like interested and I read a lot about it, but I never collected NFTs. I understood the tech. I understood, why it's great, but, I never really, interacted that much with it. But I understood definitely like what it could do and what the allure was. And then I met one of my co-founders and we bonded about music rights in general and like the power of music rights and how awesome would it be to both fund like an up and coming artist and be a part of the growth, but also, and more importantly, almost like, at that time, Bob Dylan and Neil Young, all of these big stars were selling catalogs. And we were like, we're the ones who are creating the value of the catalog because we're listening to it all the time. Like, why isn't that a normal IPO? Why isn't that, here, guys, you created the value. Now it's your turn to own it. Like, why are those deals always bilateral? Why is it always one entity or, big corporation buying up all of those rights? Which was the same for the stock market for a long time. Or it wasn't a stock market, but for stocks in big companies, it was only big funds buying them until the public could actually participate. So that was like where the idea started about 1.5 years ago. And then it wasn't until like 2 months after that where we decided to double down on building it on crypto, because we saw that, it had very clear advantages to doing that, like technically. You have the 24/7 availability, it's easier to track, it's easier to do royalty payouts. So really like the blockchain aspect of this came in after, after the core concept was really, was created. And then, Stockholm has quite a small Web3 scene, and Oscar was, he's one of the founding fathers of that scene, I would say. So, you know, we met quite early on and really, you know, did everything we could to bring him in.
Yeah. And we tried understanding, like, you know, we love Web3 and try to really add those things that we loved into the Anotherblock ecosystem.
Got it. Why should people feel entitled to own more of the value that they create? Like, why should that be a right of somebody interacting in the digital world? Because if you think about it, right now, when you consume content and you consume media, the average listener doesn't think, wow, I'm getting screwed here. I should be owning a piece of the value that I'm creating to some capacity. Yeah. It's a very, it's a new way of thinking for the consumer. And I'd say we're very early in the adoption curve that sort of thinks this way. So when you're thinking about, and you made the argument that we should be capturing more of the value that we create. Like that's essentially paraphrasing what you said. Why should that be a right? And would you say that a lot of people think like that today, but they just don't have the tools to achieve that want?
Yeah, I wouldn't say it should be a right. Definitely not. It shouldn't be a right for anyone. Like it's up to the creator in the end of the day. I'm just saying that it's something that would be very, you know, I think it's something that would be very welcome and something that people would appreciate having the opportunity to be a part of.
Because and we need the option too.
Yeah, it's more on the option side of it. Like obviously it's going to be down to the creator at the end of the day. But like if you look at other things people invest in, like music and these kind of assets, they also perform really well and they are good investments. But the difference is that it's so much clearer that you're a part of that value creation. So to me, it's just like creating that possibility. And I'm sure that people will want to be a part of that, you know, because they're a part of the value creation. They should be part of the value, you know, extraction.
Right.
But it definitely shouldn't be like, I'm creating, like, I should have the right to own some of your rights because I'm the one that's listening. But it's more like, you know, why isn't this a part of the mix of things people can place their capital in and be, you know, co-owners of?
Got it.
And if we're looking at the kind of like attention economy, like if we do want to have a generation that just scrolls and not participating and like actually activating, I think this is a great way of just activating people and making people have cautious decisions of what they actually like.
When you think of the average person that's scrolling through TikTok and contributing to the virality of today's music, what do you think their mindset is as they're consuming this content when it comes to the music that's pegged and complemented to the video content that they're watching? What do you think their mindset is in that given time?
I mean, in the TikTok part, it's harder to say, like, because maybe they're more focused on the image material that they're watching and they don't really, you know, notice the sound or, you know, maybe they do. And their mindset then is, I don't think the mindset is like, I'm a part of making this a success. You know, I don't think that that's a part of the thinking today, but, you know, 10 years from now, maybe if you see a video that you think is going to go viral or listen to a song that you think is going to get big, like if there's an opportunity to jump in early because you have a great taste or whatever, you care about it, like it would be great to have that opportunity, in my opinion.
That makes sense. I'm a big believer that I would love new ways to contribute to more of the value that I create and like be more hands-on with more of the value. And value is very arbitrary. It could be listening to a song. And my way of contributing is supporting the artist by collecting their NFT. Right. Or if I'm listening to a podcast, my way of supporting the network is through patronage by collecting their NFT. Like it all comes back to the NFT for me, right? Something that shows my level of intimacy and my level of love that's measured on chain, I think is a very cool way to do that. But a lot of people have yet to sort of like get that fuse click, you know, the way we sort of kind of like came to
and I agree with you. And I think that like just, you know, the NFT part of it is an important aspect of it because it's like some sort of, you know, almost, it is tangible, but, you know, you can't touch it, but it is the closest thing to tangible, you know, owning a piece of something and being a part of something that you can come. So I think that, you know, this revolution is needed in order for people to start thinking this way.
And a good way for you to bring around your data instead of having Apple collect, oh, you did a great review on the podcast you love. You gave 5 stars. That's very limited to the Apple ecosystem. Then.
Totally, totally. Do you think that these behaviors of collecting tokens are going to be the new form of showcasing fandom on a greater scale? Or is this a niche limited to a certain few?
It completely depends on how well we bridge the limitations right now. So,
okay.
I mean, if you look at it, like it's been a focus for us all the time. Like, how do we make it so easy for anyone who loves music to be a part of this? But, you know, it isn't that easy today to just interact with a credit card and to build a product where you can, you know, have your tokens, like where you can have all of the benefits of an NFT and, you know, having it on the blockchain, while also leveraging all the benefits of, you know, a Web 2 checkout or a web, you know, that flow of things. And I think it won't be until, you know, we can have both where, you know, it can go really, really big. But, you know, if we don't figure out as a community how to solve that, it's going to stay niche, in my opinion, you know. And what I mean there is like, okay, obviously there are really good custodial solutions and things like that. But then with those things, you also lose some of the parts of you owning something directly, right?
Mm-hmm.
But if the ecosystem as a whole, I'm talking about the whole crypto and NFT ecosystem, figures out a way in which, you know, you can really come close to that feeling of like, I own this piece, I own this wallet, but at the same time, it's just as simple to check out as it is on Amazon. Like by then, if those two things align, then I definitely think this is a mass market thing.
The way I'm understanding the way it works today outside of Web3, okay, when you build music fandom, I'm going to use one specific example. I'm going to use Lady Gaga as an example. It's an example that I use oftentimes in the podcast and that I like to ask my guests about that are building like crypto native products. Now, a lot of the premise of this question stems from sort of what's happening in my world today, going through crypto startup school and accelerator for Bello, right? Talking to all these people who've done on-chain IP really well, who've built communities, and me thinking like, what if the thing that's preventing Web3 from hitting 100 million users is Web3 itself? And what do I mean by that? When you go on a Facebook group today and you look up, or when you go on Facebook and you look up Lady Gaga, you'll see thousands of Facebook groups around Lady Gaga that her fans have independently created around different attributes of Lady Gaga. The equivalent of that could be like everybody that has a gold jacket in the Bored Ape Yacht Club will create a Discord for those gold jackets. Everybody that's met Lady Gaga will join the Facebook group that says, I met Lady Gaga. And by the way, that is a Facebook group, and there's 7,000 people in that group, and they posted like 20 times in the last day. Okay, so they don't have a token, but they love the music. They love the element of connecting with all the other Gaga fans. They love the music. They love what she stands for. They love her fashion sense. They love all these things about her, and that's what brings them together, not a token, right? Yeah. So, and I present this question or this narrative or whatever you want to call this speech that I'm giving right now, okay? From the sake of challenging how I think of things in Web3 and what's actually important to the end user when it comes to connecting with their fans, because I feel like if you brought a token into the mix or any sort of a financial element, whether it's on chain or off chain, into those communities, the entire vibe would be completely different. Completely different. Definitely. I'm curious if you have any thoughts on that.
I mean, we had a look in these Discords and the subreddits when we did a drop with Danny Boy Styles, the producer for The Weeknd. We went on a hunt to kind of look at the different sub communities. So, you know, there is a difference.
There is a difference, and we were in like The Weeknd's, you know, just their Discord server that has nothing to do with a token or Web3, and it's super, you know, so many people, there's so much activity. They don't need a token to be there at all. So, I mean, I so agree with you, and it's like, you know, 2 years ago when you met startups and you're like, but why are you doing this on blockchain? Like, what's the actual benefit of this in this case? I think to us, if you look at like the big artists that we're working with or the big producers, the big songs, then obviously it is like partly the financial aspect of it. Like you can actually trace the token you hold to a physical contract that says that you are a co-owner of this track, and that's what we're building the community around. So, I mean, that would be more difficult not having it on chain. But I'm not saying that, you know, the fact that we have this token makes it a better fan community. You know, I think that those are two really different things. So, like, for us, having it on token makes it a much easier way to say that you actually own a piece of the song for real. Like that's what we're serving today. And I think that, for these really, really big artists, it might be difficult to have, tokens be the bridge to their fans. But I do think, though, on the long tail, that tokens may play a role in just, assembling those early supporters. But yeah, I mean, it's hard to say like what it actually does that's completely different from a really active Facebook group.
I mean, for us, it's easier to distribute utility. And I mean, like you did, Adam, with your minting the NFTs for the podcast, tracing everything, analytics becomes very much, I mean, you become closer with your audience, at least.
100%. And I think just on this rant really quick I think it's less about if tokens are needed or not, because I do see a world for tokens. It's more about like, what is the human behavior that a token fits into place organically?
Yeah.
And when I think about like Web3's adoption, I think let's plug in this technology into systems in which everyday user already participates. So for example, you buy a ticket to see a Lady Gaga show. The underpinning of that ticket is an NFT. The user and the attendee has no idea that's happening. They then go create a Facebook-like group around everybody that's attended the conference and the concert, and the only way to get into that community is if you were at the show itself. And then forget token, forget price up, price down, floor price, like forget all that stuff. You just shoot the shit and talk about Lady Gaga, But
exactly,
what
and
got
that
you there
has to do
was
with
this verifiable thing, right? That would symbolize your access into the community.
Yeah, love that. And I mean, that also has to do with like the simplicity in which you can access this. So if you really bridge everything, so it is as easy to buy it via fiat as via crypto, when you buy this ticket, like that is the initial step that needs to be bridged before all of those, that example, for instance, would be a reality where it's like just a different technology that makes it easier.
So I want to pivot more into talking about Anotherblock and just understanding what is your thesis for a crypto-enabled music industry?
So, I mean, the thesis as a whole is, it starts off with like, we want people to be able to co-own music. And there's two big legs that stands on, right? The first leg is we want people to be able to own parts of big tracks that have delivered and are going to deliver. It can be a new track, but from an established artist. And, that has two values. It has the emotional value of owning a piece of something, but it also has obvious, financial value because you actually own a piece of something that's going to generate, something. And, that's the first leg we stand on. The second leg is for the up and coming artists. And that's something that we're going to focus on, not now, but after a while. So the reason why we're starting with the first leg is because we want to bring people in, educate them into how it works, before, allowing up and coming artists, etc., to have this tool that they can also use, for their community. And I think it's going to be two different value propositions for these groups. Like in the second groups, when up and coming artists, royalties are going to be less important. It's going to be more focused on, how you can actually engage with this young artist in their path of creating something bigger. While for the bigger artists, it's more of this emotional thing of like, oh, I own a piece of this star and I earn royalties, right? So. So that's, I think that's in the realm that we're working, like, better attachment to the songs you already love and being a part of that, that financial development and also being a part of this up and coming artist. Those are the two ways I think that our space can actually have an impact.
What do you say to those who are thinking, forget the old system, I'm here to build a new system. The old system screwed me over. NFTs serve as a great primitive to sort of like create this new platform for myself, for my music, and everybody that loves it. So I don't want to integrate the royalties. I just want to tokenize my existing song independent of what's happening in the Web2 world.
I would say I love that. We need so many products out there. So like, why not do that? That's awesome. If that's what you feel like, if that's what, feels the best, and if that's where you're going to get a lot of people in, like, definitely do that. And, for our up and coming artists, what we're going to do, it's not as sure that we will work with royalties in the same way. But for what I would say to someone like, that has that opinion is that, it's great. You have some options that are doing that. You should definitely use that. But we're here to provide a solution for all of the people that say that, these NFTs have no value. Like, music NFTs are just, empty, right? We're here to create something that actually bridges the real world and the NFT world, where we say that, hey, these NFTs, they're not empty. They actually you own a piece of this in the real world. Like, we're doing something different. I think that's also needed in the space. I don't think it's like a dichotomy that you need to do.
Got it.
Either one will win everything or the other will win everything. I think, it's different approaches. I'm a firm believer in what we're doing. And I think that the reason why I didn't get too involved with NFTs before this was that I missed that aspect of it. I missed the aspect of, what does it translate to in the real world?
Let's talk about that for a second, because I think it's super important to create frameworks for people to understand how all these new primitives fit into place. So what you're sort of explaining is one framework, and then there's another framework. I want you to tap more into your framework. Like, when does an artist choose to go the royalty-backed NFT route?
Yeah. So, I mean, for an artist, first of all, like, the artist doesn't need to understand much about Web3 or anything at this stage, right? So an artist today, we can say that, say that an artist in general gives away a lot. Let's take an independent artist as an example. They can give a lot away to a label in order to get funding, right? So they give 50% of the rights away to labels so that they get a little bit of funding, so that they have something to live on while, they hope that the song is going to make it big. But if it does, right, the label has 50%. So if there was an open marketplace for music rights, then you can say, you know what, instead of giving away 50%, I'm gonna sell 20%, but I'm going to sell it to the people who actually like this music and support this music, and it's going to spread this music. And they end up with 80% of the right, but maybe they have the same funding in the end. That's the type of mentality where we think that, the public and the community can actually replace a big part of what the major labels have been able to do, which is, one of the biggest things in the marketing, marketing mix is, being able to give upfront cash. And if that is, if that can be represented by people who will then spread this even more aggressively, then that might be a really, really good option, right?
I love that. And from a product perspective, Keith, when you think about like designing a product, thinking about like the visual psychological effects when you see a product like a royalty-backed music NFT, right? You can't help but wonder, like, what is the optimal price and what is the optimal format for displaying these items, for selling these items. Let's talk about price for a second, okay?
Yeah.
How do you guys think about pricing these NFTs? Because I feel like the Rihana drop is much different than another drop that you'll do. That's much different than another drop that you'll do. Like, how do you think about the psychology of pricing in this, and how do you actually get to the conclusion that, all right, this is what we're going with, this is what makes most sense?
Yeah. I mean, the evaluation, we have a fairly standardized way of evaluating.
Yeah, exactly. So, I mean, I can talk a little bit about how we value like the whole
This is
track.
our evaluation guy.
So, and then, but then it's up to you and the product team to decide like how many NFTs and how much to split it. But if you started like, what are we valuing? So we have a percentage of the song that's going to bring in X amount of capital. And, the NFT price is going to be that divided by the number of NFTs eventually, right? But when we look at like what we're selling it for, we aim to have a yield that is, widely between 7 and 12% or something per year. So it is like when we look at like the performance, the historical performance, we work with third parties that give us a good view on the next coming years in terms of streaming. So we have a good view on like how much cash flow this asset, this song will generate. And then we obviously work with, risk assessments and interest rates on in 5 years in the future, that value is going to be less than today. So, we look at like, how is the cash flow going to be over the next 20, 30 years?
Got it.
And what does the cash flow in the future mean in terms of value today, right? Standard discounted cash flow methods. But when we put all of that together, we eventually get a price. Like, this is what we believe this track is worth, and we present it to the seller. So we're a platform, so the seller is always going to sell it. And today, we aim to negotiate with the seller as much as we can to get an as fair price as possible to our end users. in the future, the idea is that the seller should be able to price it at whatever they want, but we're always going to state, what's our economic calculation of this track, so that if you completely miss out on that, then it's up to you if you sell it or not, essentially, right? But that's it. And then we need to figure out like how many tokens to split it into and what the price is, and that's difficult because that's psychology, basically.
Yeah, and that's a lot about listening to the music, but also listening to the rights holder that wants to divest. Because there's a kind of psychology and kind of branding mechanism in having a higher price point per NFT, as it's being portrayed as more exclusive or more scarce. But I would say, I mean, shout out to On-Chain Music that also helped me. We worked a lot with third parties to get this kind of almost independent analysis of the track's performance. And, really fighting for our holders in this current shape to get a good yield and a good valuation.
So that's basically it. So when you put the things we put together, it's like, this is the value of the track financially. And today, I mean, we price the tokens at that value. So if it goes up on the secondary, that's up to the market, because maybe there's emotional aspects to owning music, right? So today we've seen that, all drops have risen on the secondary, which is great for, our early minters. But it also shows that obviously, music has more value than the financial value, which is what we're pricing it at initially.
Yeah.
So you talked about the emotional aspect. So that sort of like brings me into my next question. Do people mint these NFTs out of emotion or for the investment, the royalties element?
It's hard. So like what I tell people who ask, because that's such a lot of people ask that question. And the honest answer is that we don't know.
Okay.
Like we obviously have it, in our Discord and everything. Like we can see that there are several types of users. There's the user who just, loves Web3 and loves this type of application. There's the user really in it to, to gain royalties and invest and to flip and to make sure that they win financially. And then there are definitely the users that just love building catalog and owning pieces of music. But it's so hard to say today, like how big these parts are. And, if, maybe the ones who are in it for the music are just more vocal than the others. Like it's so hard since we're not collecting that much data, on the people who use this. We don't yet know like what is the focus. So I think that, as this grows and this behavior matures, we're going to learn as well, like where to put the emphasis on a product level.
Yeah, because right now we very much focus on splitting it between the emotional ownership and the financial. I mean, we have one of our biggest whales working for Goldman Sachs that are super bullish on alternative asset music. So he's always preaching about the financial return and the type of assets that are not correlated with the market, because people still listen to music when it's a bear market. But I would say, we split it and we're trying to figure it out. I mean, we're running basically experiments with every one of our drops.
I mean, what I could say is I can't see this being like a Bloomberg terminal.
You cannot see it.
So, and what I can't see either is this just being like a collectible with no rights attached to it, So like, I definitely think like we need both on a good level.
Interesting. There's so many rabbit holes to sort of, I guess, go down after that. I want to ask you guys, like, what is the, I guess, what's in it for the people that you select to kind of like take a portion of their percentage, and then I guess it's like fractionalizing it, right? And selling it actually at a premium, right? To people who collect the NFTs for the most part, right? Or is there a different model that you guys have in mind?
No, I mean, that is it. So, I mean, we're trying to sell it at a fair price. So that means that, at a certain price level, it makes sense for the seller to sell it because they get capital up front instead of capital later. But it also makes sense from an investment standpoint, because it actually has a good yield. So there definitely is a level where you can actually strike a balance and the buyers and sellers can meet. And that's what, we want to do at scale. So I definitely don't see at this stage, we don't want any part to get screwed. But the other factor here, we'll see how that develops with the marketplace wars. But obviously, like the seller gets royalties on every secondary trade. So, that is an aspect that you can bring in to actually get a better deal for the initial sales, right?
Got it.
Which is a good factor as well.
Got it. Let's talk more about your recent drop, specifically the Rihana drop, because that was perfectly timed and light with the Superbowl.
Yeah.
I loved the execution of it leading up to the event. It was really cool to see, and shocked a lot of people to kind of like come out with that project at that time. So props to you guys. Can you walk me through like how did that happen? How did you like manage to pull that off specifically in timing for the Super Bowl, and just that entire story?
Yeah, I mean, the story is quite simple. So we work with this network of people who sit on good music rights. And I was in LA last year, and I met Deputy, which is the producer for this track. So he's done a lot of great tracks, and he did Bitch But I'm Money, and he has YouTube videos on how he produced it. So he's a real superstar producer. So we basically told him about the concept. We'd done a drop with one of his friends before. We knew people in his network, and we were, discussing our platform and saying that, this is a really good way for you to get more visibility as a producer, to tell people in the world that, you created this, that it's great, from a financial aspect, this is likely to be traded a lot. You're going to get cut back on every trade. And, if we find a price where you're comfortable and that makes sense for the buyer, like this is something we should definitely do. And, he got hooked, and we started working on it. It was mainly my team, my music team, that was working on hashing out all of the details. But yeah, then we started planning on, what's a good timing for this. Obviously, the Super Bowl was coming up, and then we did the drop, and we definitely underestimated the impact it would have. We just did 300 editions, 300 NFTs of this. So in our, we're sitting here in Stockholm, and we're like, yeah, it's good timing. Maybe we'll sell out quicker than expected. That was basically the expectation levels. But then, it went completely viral, like a bit too viral in my opinion, because, we got just so much attention. Like it ended up on CNN after a while. And I think one of the great things about that attention is that it brought a lot of eyes to our type of NFT. So you got people from law.com, analyzing analyzing our contracts that are tied to the token. Like, how can you actually do this? You get people saying it's a perfect application for this ad for NFTs. You got others criticizing. It's really good. You start a discussion. You get all of that.
We saw a bias storm of all of our other tokens too.
Yeah. So it was super good all in all. What I didn't like so much is when a media hype starts, we're really proud that it's Deputy who does the drop, and he created the song, and he's selling it CRIs, right? But when the media cycle goes, it goes, Deputy is selling Bitch But I'm Money by Rihana. The next one says something, and when it was on CNN, it said Rihana sells NFTs, which wasn't at all our press release, what we communicated. That I would say that's the only negative factor of that. Coverage.
So when you got news that OpenSea halted trading on the NFTs, what were your first thoughts?
My first thoughts was this got too big, because I think we had crazy amounts. We were at one point, I think we were the most traded over the last 24 hours or something, on all projects. So my first thought was this is being traded way too much, because the secondary price was also going through the roof, which doesn't really make sense with our whole, royalties, expectations, and all of that, when you buy it at that high price. When we saw that it was going viral even on OpenSea, we were like, okay, what is going on here? And when they halted it, we of course started thinking, what's going on here? And we didn't really get a straight answer to why.
Because it was also during the Super Bowl. So a lot of people were on holidays.
Yeah.
And we have this issue, which not a lot of other NFT projects have, that we release new collections every single month. So we have been pretty much in good contact with OpenSea, trying to understand, get our collections verified, not for them to be any scam collections out there. So, but it just got escalated, and we're still I think a lot of NFT projects gets a little bit stuck in this kind of marketplace war.
Yeah, I think your model is very unique in which you don't go to the artists themselves to try to fractionalize a percentage of their shares. You go to the writers, the producers, and then you try to bring those people to kind of bring light to music NFTs on your platform through their share, right? And the second an artist like Rihana comes into the picture, who has so many eyeballs on her, specifically right before the biggest entertainment event in the world kicks off, and just so happens to open with that song as well for her halftime performance, which is even crazier. The media starts twisting. Oh, Rihana started selling NFTs, and then the narrative gets convoluted, and then
exactly,
I see why it would get taken down.
Yeah. I mean, maybe that is why. I mean, we haven't really gotten the answer.
Haven't gotten the answer.
Definitely, like, the narrative got twisted. We're happy that it got a lot of attention, but we want the attention to go to Deputy because he's the one who's doing this, and which is awesome. But what I would say there is that, like, we do work with producers and songwriters. We've done it quite a lot, and we have more in the pipeline coming. But we also work directly with labels. We also, like, our first drop was directly with Rehab and Laid Back Luke. So we try to mix it up. Artists, like, for us, it's all about, like, all of these people are part of creating this. So, no matter who they are, if they're the main artist or not, if it's a good track, we want to give them a platform to share it.
And just to add, like, we're still listed on OpenSea, and hopefully we'll get the conversation going and try to understand this together. Because I think, like, we all need regulatory clarification of what's okay and what's not.
Yeah.
Got it. That makes sense. Another question I want to ask you guys is sort of the securities element around this, because everybody's thinking about it, right?
Yeah.
And nobody has really provided clarity. And I think you guys are the practitioners and the most ideal people we could go to kind of get an understanding of what are the securities laws around being able to actually associate a royalty with a music NFT. What are your thoughts on that? How do you explain that to the person who asks you, like, what the hell's going on over here?
Yeah, I mean, so I would say, like, we're based in Stockholm, in Sweden, and here in Europe, it is way more clear. So here you have this framework, to be considered a security, you should either deal with debt, or you should have voting rights in a company, or you should be traded on a regulated exchange like Nasdaq, right? So here, we're clearly not a security, but we are something. We are something that likely should be regulated. And we have a legal team, like, we want to comply with regulation, but it is a gray zone. So we don't know, there is no framework in which we can apply to at this stage. So there's this MiCA regulation coming out in Europe, which will be enforced in 1.5 years from now. So we're hoping that will give us more clarity into how we should position this and, what guardrails we should have with the product to protect the customer. Because, the SEC and, our version of it here, like, they exist to protect the end customer. So, we don't want to mess with that. We want to be aligned, but it's really hard when you don't know how at this stage, right? We could do, like, most of the things you do with a security, but, like, maybe that will not be necessary because, we're not classified as that, because it's sharing a royalty stream. It's way different. So, like, at this stage, it is a gray zone we're operating in, but we're keeping our eyes on, like, the European regulation to see how we can comply when it comes. In the States, it's different. So we have players like Royal.io, that are there, that are doing something very similar to us. And I'm guessing that, being based there and having more, like, it's a minority for us that are Americans, right? But I'm guessing it's more for them. And I'm assuming that they also are trying to get answers from this, is like, how should, this be, how should we act in this market, in order to be compliant? But I'm assuming also it's not that easy for them to get answers. And we're looking into this now because we know that, like, the SEC, especially in America, like, can be more aggressive. So we're actually looking into potentially, restricting Americans to,
just like Blur did with their airdrop, and now the trending of I'm not an American citizen. You have to check the box. It's a weird world we're living in.
Yeah, so I mean, we're looking into that. We haven't decided yet, but, like, one way, like, unless it comes out, like, clearer communications from the States, like, it's not unlikely that we will, restrict access for Americans because, it's a very aggressive, like, entity, and, like, we don't want to mess with any of that. Whilst here in Europe, we have a much more clear view on, like, what would be the ramifications and, like, what could happen, like, if they say we're security, okay, then we do this and that, we're more comfortable with that. So, I mean, we're still seeing, but I think in general, people should be happy that these how do you say entities, or that they exist and they're here to do something good. But let's not hope that they halt innovation either.
Right. Have you guys gotten any backlash from labels that you've tried to work with approaching them with this new model? Artists and writers that you've tried to work with? What tends to be the common misconceptions?
I would say early on when we were pitching, like a lot of people are afraid of the space in general, like how it can have an effect on their brand, being a part of the NFT world, basically. I think that's a big thing that we try to work on when we have early conversations.
Yeah, a year ago it was the environmental aspects of Ethereum, and then all of a sudden it changed to becoming like NFTs is a scam. Those are the prejudice that we're trying to fight. So.
Yeah, I would say that those are the two biggest things, because from a standpoint of what we're offering and the product, a lot of people find it pretty clear, and either they like it or they don't. It's a normal sales process, but that's the factor that I find a bit arbitrary.
Got it.
What they think about the space, essentially.
Got it. I have a couple more questions for you. The first one is, or I guess the second to last one is this concept of paying people out royalties. I wonder if there's a world where you can pay people out per second or per minute or per X time frame versus the typical few month period in which people get their paychecks from Spotify and Apple Music and the DSPs. How do you guys think about that?
Yeah, because royalties are kind of structured in a very conservative and fairly old way in the model of getting paid per year or per 6 months. And so we wanted really to bring in the concept. One of the first concepts when we started to contribute to DAOs, me and a couple of other devs here, was to get paid every second and having that, making it almost trustless that you are not going to get rugged if you work for 1 month and then the project's just going to decide, no, you're not getting paid. But if you get paid every second, you're always getting paid for what you do. So we wanted to bring in that concept, and I think we really tried to scout all over the Web3 ecosystem of finding good partners. So we partnered up with Superfluid, or the money streamers, because we met them and talked with them at ETH New York last summer, and we were like, it would be super awesome if we could just remove that little trust from Anotherblock and just starting paying them by the seconds. So we can almost, take a step back and become just the platform, trying to facilitate this and giving them, based on how it streams, looking at the data and paying it out and giving the custody to our holders.
Got it. And the last question that I have is, what's next for Anotherblock? What's on the roadmap? What can we expect that's coming out soon?
Yeah, that is a big thing
more
that's coming
music.
out. But it's going to have more music, more big drops, more of a mixture of drops, I would say, more experimentation in terms of genres and where they come from. It's not just going to be it's going to be more of a variety, more of a mix, but still proved music. And then obviously
social stuff with Lens.
Yeah, definitely.
And then bringing in some Lens integrations to get the fans connecting.
And then, in the near future, obviously something really, really exciting for the independent creator as well.
Yes, we're looking to scale up, having more drops, not just having one every month, and just bringing in more music, making, people own music, making them catalog holders, really getting the music that they like.
I love it. I'm keeping an eye out, excited to see what comes next out of your corner. Before I let you go, where can we find you? Where can we learn more?
Anotherblock.io is the most simple way, and you can find your way to our Discord there and our Twitter and all of that.
Big Mish.
Yeah.
More Keith.
That's our handle.
Amazing. Let's go. Thank you for being on. Till next time.
Thank you so much.
Thank you.